All right. Got a good group coming in today. So welcome everyone. Welcome to today's webinar. This is a brand new tool available on Firstrade. So we're here to help simplify options trading a little bit today using Firstrade's new options builder. So again, here, just a little bit about myself, of course, as I go through this. So I'm Gary Christie. I'm the director of research at Trading Central in Ottawa, Canada. That's where I am based. But really, I'm a trader. That's why I consider myself. I've been trading actively for over 20 years now. My passions around technical analysis specifically, and of course, options trading today, what you're going to see today. And we're going to show you Options Builder today, a tool that I'm a co-designer of. So I'm extremely passionate about it. We'll have a brief demo today on the live platform. So if you do have an account with Firstrade, please, I encourage you to log in and play around as I do when we get to that live portion. We're going to have some fun today. Again, part of my job is I'm an analyst, so we give a lot of directional views on technicals to institutions like hedge funds and other various banks, high value clients all around the world. So we have a team of analysts globally that provide 24-hour coverage of all asset classes, all markets. Uh, of course, I'm responsible for anything that trades on North American hours. So specifically FX, derivatives, options, a lot of futures trading, equities. And a lot of firms rely on us for our expertise in building trading plans. And some of that you're going to see today inside this new tool. So you're going to see some live examples today. Again, I'm not here to give advice, although that's my day job. That's not the point of today's presentation. So we'll have a disclaimer up there just to say, again, this is for educational purposes only. Um, but really, I'm here to really empower all of you to help hopefully make some better investment decisions using options and a little bit of technical analysis in there today as well. So if you never heard of us before, I'll give you an introduction to Trading Central, who we are, where we come from, what we do. I'll talk briefly today a little bit about some key principles of options trading because it's important to understand how we approach this new product from an education perspective and from using proper trade mechanics. So we'll briefly go over some of the some concepts, and then we'll play with the live demo. And again, if you have any questions throughout at any moment in time, please fire away at the chat. And I see some comments coming in, and please answer if you have questions. I will try to get to them real time. We'll make this engaging, so don't be shy. Just ask away. Again, it could be anything around options trading, specifically the tool, and trading in general. If you have questions on on proper mechanics of building trading plans, that's my passion. And we can look at stocks too. So if you're interested in certain stocks with options, throw them in the chat as well. I'll try to answer them live and take a look at what the tool looks like if you don't have access to it online. So again, Trading Central, who are we? So we're founded in 1999, headquartered in Paris, France, actually. We bought a company called Recognia based in Ottawa, which is why I am here, that does automated pattern recognition of technical analysis. And now we've branched into fundamental analysis. We have our own LLMs that do they use AI to help formulate trading plans, summarize some of the products we have, and technical analysis, of course. So we're known as technical analysis shop, but now we have fundamentals. We use machine learning to disseminate the news. We have and all these products you'll actually see today inside Firstrade. Although I do give broader webinars on all the tools, today we'll focus just on options. But we'll show you a bit of that today. We do also do a lot of newsletters. So we do market briefs every morning in every region. And we'll show you one of them today to really help you set up for your trading day in the morning to really give you all relevant information that's actionable, which is important in a news article, right? So not just some general news. We don't want to provide stuff that doesn't matter. We focus really on what can affect trading today, and that's available to you for free as well. But yeah, we're known for providing coverage around the clock, 24/7. When I finish my day around 5:30, 6 o'clock, depending on the markets, all our technical analysis work, all our research gets handed over to our Hong Kong office. We have a team there in Hong Kong. They'll continue in Asian hours and Australian hours, and then they pass their research over right to our European desk. So in Paris, that covers markets over there to help us get prepared for the U.S. morning trading day. So pretty unique. We have 10 analysts that work around the clock to provide this coverage, and we also maintain the products you're going to see today, which is going to be fun to see. So that's us. You can find a lot more about us on tradingcentral.com. I encourage you to take a look. There's my profile, my team's on there. We have some blog posts about the markets that we post generally for all users to see. That's tradingcentral.com. But today, let's just get to the fun of it. Really, I want to talk about some basics of options trading and how we approached helping people filter for trade ideas. Again, it's a multi-step approach, which you'll see in the if you look at online right now, you'll see if you put up a quote in Firstrade, pull up any symbol, you will see at the bottom called Options Builder. Okay, so what do we care about trading options, right? So options is a really ultimately a probability game, right? And so one of the key principles to understand is that every single options trade, whether it's a simple call purchase or a multi-leg strategy, has an associated probability of profit. The POP you will see here. We call it POP. Now, that POP really helps us frame expectations before we even place a trade. This is important. It allows us to compare strategies not just on a payout potential, but also how often are they statistically likely to win, which is also extremely important. So, in general, of course, higher probability trades tend to offer smaller max profits, but they win far more consistently. Lower probability trades can offer bigger payouts, but they come with a higher chance of loss. So in this example here, this is consider a covered call, for example. It has limited upside because you're capping your potential share gains, but in exchange, you often get a higher pop, a higher probability of profit, usually above 50%. So a high probability income focus approach is what this is. Okay. On the other hand, if you buy an out of the money call, you might only have a slight 33% chance of finishing in the money, but the profit potential is theoretically unlimited. In this product, we'll always show as best we can at least three different strategies always, and we're using proper mechanics. They have to have realistic buying power as well, which we'll get to in a minute. All right. So really, when we think about options trading, it's all about choosing the balance between probability and the payoff that really suits your trading style. Now, there's really no right or wrong here, right? So it's based on your preferences. There's a lot of different strategies out there, hundreds out there. Some people like to do credit spreads. Some may focus on single legs, options, and directional. There's no judgment here. Any strategy that works for you is fantastic. It's really you have to find what suits your style and what you're willing to forego in terms of risk reward. Okay, and there's proper ways of doing these trades despite your directional bias, right? So we'll show that as well as how this tool kind of filters that. But let's just continue on and see what else can we use options for, right? So they're not just for speculation, right? They could be for more than that. So while many people think options, they think about big directional bets or attempts to hit home runs, which we see a lot of attempts at least. Options really offer far more versatility than that and just speculation. So a core principle really of options trading is that these instruments can help you enhance your returns or protect your portfolio and even reduce the capital required to take on an equity position, which is really the foundation of how we built this tool. It's really what we wanted to try to do is take stock traders and give them some tools to trade options in the same kind of way directionally, but use less buying power. That's really the joy I get of trading options is less buying power and having more positions on. But we'll show you that in a minute. But one of the most common you've probably heard of is income generation, the most common uses of these trading options. Strategies like these, like covered calls, allow you to earn premium on stocks you already own, really, helping you get paid while holding a position you already believe in. Okay. They're also powerful hedging tools using options, right? So a protective put or even a bear put spread can act like insurance on your stock. So it really allows you to stay invested and really helping you limit the downside risk if you want to hold on to that stock. And then again, what I mentioned before, one of the main benefits is really a less capital requirement. So instead of buying 100 shares of a higher price stock outright, you can gain exposure using options at a fraction of the cost, but have the same risk reward, which we'll show you how that works in a minute. So again, here's some two examples here we have on the screen, right? Say you own 100 shares of Apple, you can sell a covered call to generate extra income on top of your regular share gains. Or if you're concerned of a pullback, maybe earnings are coming up, some volatility happening. You don't want to dump your stock, but you want to, protect yourself on the downside. You can buy a protective put or a bear put spread to really, ensure the position and keep you holding the stock. Another key principle you should understand before getting into the options game is this concept of theta decay or time decay. This is extremely important to understand. Okay. Really, unlike stocks, options are wasting assets. And what do you mean by that? So they lose value as time passes. So as every day goes by, all else being equal, an option becomes slightly less valuable simply because there's less time for the underlying stock to make the move that you need. So this is why a lot of buyers of options are always fighting the clock. The longer the stock takes to move, the more the options decay. And on the other hand, option sellers benefit from this decay. So time is on their side because they collect premium and profit instantly as the time value erodes. These are two types of strategies, right? So this dynamic is a big reason why credit spreads and other premium selling strategies tend to be more successful for probability-based traders. You're aligning your strategy with both profitability and the natural decay in the option. So we'll show you how we can take advantage of that in the tool. But for an example, if you buy an out of the money call and the stock doesn't move very quickly or quick enough, the option will lose value, even if the stock price stays completely flat, right? This time decay is constantly working against the buyer options. So understanding this is, of course, this understanding theta is essential when choosing whether to be a premium buyer or a premium seller. And with our dashboard, we'll show you what the volatility looks like to really help you, point you in the right direction of where you should be focused. Okay, a couple more concepts before we see the tool live, right? So again, these are key principles. So understand time decay for sure and theta before you enter any position or start trading options. Also, there's a matter of liquidity. Okay, so when trading options, liquidity is one of the most important and often overlooked factors. So liquidity determines really how easily you can enter and exit a position without paying excessive costs. Okay, so a key principle here is to stick with highly liquid options, meaning contracts with tight bid-ask spreads. Tight spreads really reduce slippage and give you fairer prices both when you open and close your position. Right, you also have a lot more available contracts to choose from. You also want to look for underlying stocks that have high daily options volume and strong open interest, of course. This really tells you there's plenty of buyers and sellers, which really help you with smoother execution. So we have a liquidity score in the tool out of 3 stars, 3 being the best, 2 being okay, but slightly illiquid. And that's all usually you're going to really see. All right. So our tool will only suggest strategies that have all these requirements already. They have to check a liquidity box for you. So we don't want to put people in a dangerous situation. So we won't offer any strategies that don't make sense at all. And keep that in mind. This is important when we get to the live demo. I see some questions coming in too. So can I trade risky options with low OI with Firstrade? I'm assuming so. Again, I'm not a professional on the platform itself. I'm in Canada. I can't even use Firstrade. But I imagine you could trade anything as long as there's an options chain, right? What we want to show you today, though, is how to do it mechanically with a strategy. Okay, so that's liquidity, and we have this built in the filter, right? So I'll give you examples like Apple and Tesla. They have highly liquid options, while small cap stocks you'll see may have nothing. And we'll show you what that looks like in the platform as we play around with it. But fire away with some questions when you have them. Please do. We're going to get to the fun stuff, the live demo. And this is some screenshots now that you're going to be seeing in the platform. So volatility is extremely important to understand and how they affect option prices. So this is one of the biggest drivers of option prices, in fact. All right. So at the basic level, high volatility means more expensive options. The market's pricing in larger potential moves, so premiums rise, right? So on the flip side, the low volatility can mean a lot cheaper options, what you're paying per contract, because the market's expecting smaller price swings. So this relationship is critical because it influences whether you should focus on being an options buyer or a seller. This is what you're seeing on the screen now is the options builder dashboard. It gives you a unique way of looking at volatility data. Okay, so again, if volatility is high and starting to contract, options tend to be overpriced. In that environment, traders will often look and prefer to sell options, to sell premium. Okay. But if volatility is low and IV starts rising, this is the chart here you can see in the bottom. Options are relatively cheap, and we can take advantage of that with maybe some debit spreads. Okay. So again, this is a filter to really help you gauge where does the stock sit in terms of volatility? Am I overpaying, underpaying? And we'll get to each widget here in a second, right? But there's some strategies around this. So volatility just isn't a chart metric. It's a core driver of options pricing and really should shape your strategy selection. At least be aware of it before you enter any trade. This is critical. Okay. So have realistic expectations. This is important. Okay. So when trading options, you know, having realistic expectations is essential, especially when it comes to selecting strike prices. This is important. I see a lot of people get this wrong. This is where our volatility cone and expected move come into play. That's that cone you see in the chart here, just to point you in the right direction. So in this cone, we built it around expected move, which is calculated using the at the money straddle. Now, you don't have to understand all these concepts. We give you education in the tool to understand what this means, but it's the price of the at the money calls plus the at the money puts for this particular expiry at the same strike price, right? This combined cost reflects what the market is collectively pricing in for movement between now and expiration at each bullet point. So we can see what's being priced in real time, what the option traders are pricing. Again, it's not a perfect science. It's just an estimate of where you think the stock's going to go by a certain date. This is extremely valuable even for just stock traders alone, right? If I'm going to be buying, this case example, Amazon, I want to know how realistic am I to have a certain target price by, in this example, when they did this, say May expiry. If I think the stock's going to go to $300, not impossible, but highly unlikely based on probability. So it keeps you centered as to where you should be focusing on with your target prices, right? And your relative potential return, right? So the expected move here really, in other words, gives us a statistically grounded estimate of how far the stock is likely to move within a given time frame based on current implied volatility. And that's an important concept, okay? So again, we want to have realistic target prices, right? We want to select realistic strike prices. They should fall within this bound to have a realistic chance. It affects your probability of profit. And we'll show that in real time how that works, okay? All right, planning the trade and trading the plan. Okay, so this is an important concept as well, right? One of the most important habits in trading, whether using stocks or options or Forex or futures, is to plan the trade first and then execute that trade with discipline. So this is where the combination of the volatility cone that we saw here and the technical views becomes incredibly powerful. So again, we talked about the expected move. We know where the stock could trade around, but the technical view really acts as your trading plan. So by enabling this toggle at the top right, you'll see this in the platform, right? This is our analyst opinion coming in from a technical analysis trend following point of view, right? This is what generally we provide to our institutional level investors and clients that we now given at the retail level that everybody can see. And again, this is designed to make sure you have a bunch of check marks in your trading plan, right? So this trading plan shows you the trend direction overall based on the trend following methodology. Shows the momentum, key support and resistance levels, and really to help you understand, how is price moving inside the expected move shown by that volatility cone. So for option traders, this is critical, right? It helps to really determine whether the stock realistically has the momentum to reach your strike price, or and also whether you should be leaning bearish or bullish. Okay, and where the risk is on the stop loss as well. This is going to help you really select, you know, stronger strike prices that make the most sense, right? But again, not just for option traders, extremely useful for stock traders as well. They can use the same framework. This is a stock trading plan with volatility tied to it. So you can choose whether you want to do a straight long or short, or use some options here. All right. So we'll talk a bit about that in the live demo. But this is we're talking about this is an analyst driven technical analysis perspective, but more on the reactionary technical analysis, not predictive. Right. So there's two types of technical analysis: predictive, which we'll show you earlier, on pattern recognition, and then there's the reactive based on price action alone. That's a whole other webinar we could probably give in the future. Quite interesting. But that's the trading plan. Okay. Key points about Options Lab before we get to the live platform. These are important. So before we dive deeper, what makes Options Lab really the strategy builder and the options builder in this lab different, and why it's such a powerful tool for traders. Okay. So every strategy uses proper mechanics. The system automatically applies the principles that experienced option traders use: structured entries, defined risk, and strategies that fit the current market environment. Second, the strategies are driven by probability and volatility. So, this options builder really doesn't do any guesswork. It's not relying on opinions of anybody. It's not my opinion you're seeing as a strategy. It's based on actual probabilities inspired by the options market itself and the current volatility regime that it's in right now. Okay. A really important benefit, of course, is that we can replicate being long or short stock with a similar probability of profit. This is key here of how we built this tool. Okay. So what we're looking at and what we mean by this, if you're going to buy a stock today, right, there's going to be the probability of it going up is 50-50. That's really the odds. It's 50-50 goes up or down. You can replicate that using options, right, to give you a better chance of success. And then, of course, we want to focus on volatility. Understanding volatility is the foundation of options pricing and really the key here to long-term success. So looking at, options builder, you'll see in here, it will help traders visualize and interpret, the volatility cone, whether we're high or low, if volatility is compressing or expanding. That's extremely important. And at its core, we're really designed to help traders follow proper mechanics. We want you to stay grounded in probability, understand volatility, and express directional views with a disciplined, structured approach. This is really the passion of how we built this product. Okay. So now we'll go play with it a bit, all right, in the next few minutes. I won't take up too much of your time because you really have to play with it to understand. But for the live demo, I'll just switch into it now. I'm going to refresh to make sure I'm still logged in. And here we are in the main page of Firstrade. All right. So how do you find Options Builder? Really just get a quote. Get a quote for anything. So I'll put in, well, we can take a look at NVIDIA. I was looking at it earlier. If I do a search, okay, you're going to have an overview. You're going to have technical insight. You can look at any automated patterns happening right now, which is kind of what I do first. Again, we have full webinars on this product alone, but this is an automated pattern recognition software to see if there's any bullish or bearish bias. But really, we'll jump right into Options Builder today. All right, so right away, you're going to see a lot of information here. We already have strategies coming up for you. And again, if you have questions, fire them away in the Q&A and the chat. I'll love to answer them. But it remembers where I was looking at last. Again, this is by design. So generally, if I only follow a specific type of strategy with my options, I want to keep it the same. And all I have to change is my bullish or bearish directional view. But I'll just reset it here for now because there's a lot of information here on NVIDIA chart. So what have we provided here? We want to give people context of what this market's doing. Of course, we have to have a price chart for that. All right, so here's the interactive price chart. You can take a look at what NVIDIA's been doing on a 6-month daily bars. But then this volatility cone gives us expected move, right? So by each monthly expiration. And right away, again, we're only dealing with monthly expiration cycles, not weekly end-of-day options. We're keeping it keeping it in the best way to replicate being long or short stock over, say, 20 days. That's the average daily chart time frame. Okay, so from here, I can get an expectation. If I want to know what Trading Essentials' opinion is, this is our analyst desk right here in Ottawa, what we think about NVIDIA. If I don't have a directional bias yet, I can click on Technical View. Now here is an instant trading plan, right? This is using, again, a bunch of factors. It's a proprietary model that we use, but generally it's using a trend following approach to price action. Okay, so what we have, a thick blue line is our pivot, we call it. It's really your stop loss, right? So if we prefer in this example, our comments, our preference will always show the downside. In this case, the downside prevails as long as 195.59, that's the blue line, remains resistance here in the short term, right? And with that bearish bias, we have target prices to the downside, which are usually major key support levels in this case. So what are we looking at, right? We can see target levels at 165 and 158, which is all pretty close to the expected move on the downside, which is important. We want at least our first target to be within the expected move. So volatility is also important in the trading plan, as well as, of course, the overall options strategy selection process. So we're bearish here. We have a stop loss. We have a downside. And also, if you're bullish, that's okay too. We can use the inverse, right? We have a 165 stop loss we can use as the key support area. And we can have alternative targets up here, right? We have 208 and 215-ish. So taking this opinion, say, okay, Gary, I like your analysis. I want to go bearish. This looks pretty weak. This stock formation, NVIDIA's had a pretty good run, right? Zooming out. What a wild ride. I can start asking or answering some questions here in the product. Okay. Uh, so now I can say, I think the stock will, let's just say, go down. I'm bearish the stock right now. What can we do now? Right? The next question is, how bearish are you? And we have to ask this question to really help decipher, how aggressive for the strike prices and the spreads and the directional bias. So you can experiment with different answers. Sometimes it'll be the same answer in the results, depending on the volatility of the instrument. But I can say generally I keep it to the more conservative approach, slightly downward. I'm slightly bearish. And then there's only one more question to ask. Again, it's a 3-question process to help you put you in the right direction in terms of strategy selection. What are you focused on when trading options? And there's many reasons why people trade options, of course. And there's no right or wrong here. But what we want to do is provide proper mechanics to each scenario. So we've given you a definition here of each category. So limiting my risk. If you're interested in managing risk more effectively by utilizing strategies that have clearly defined risk characteristics, aiming to limit potential losses, this is where I sit most of the time on all my strategies. In fact, I like to trade options because of the capped exposure to my risk. So this is where I would sit. But there's other reasons, right? Maybe you care about creating income or cash flow, right? Maybe you want to do covered calls. This is where this category would sit here. Maybe you want to do credit spreads. There's also maximizing my gain. We know some, traders out there just want to make as much money as possible, mainly, foregoing some of that probability of profit, that pop we talked about earlier. That's okay too. But if you're going to do that, of course, there is a proper strategy and proper mechanics to execute, say, single leg calls or puts. There's ways to do that. We know some people care about the math as well. So you can also focus on a high probability of profit if you're focused more on the credit side of things. And we'll show you briefly, why you would use this and how. And then the last one you put in here, again, this is simplicity at its best. This is not an advanced options trading platform. This is designed to be as simple as possible to get you in the right direction. And if some of your strategies deviate from here, maybe it's worth a second look. That's really the point we want to get across here. And we want to educate everyone on these different strategies and the effectiveness and the risks involved. So, of course, protecting my existing long. If I'm long 100 shares of NVIDIA right now, how can I protect myself on the downside if I don't want to give up my shares? Okay. And here we go. So I'll just select for now, limiting my risk just to show you how this works. So as soon as I click on show results, I'm going to get ideas right away. There's no delay in this product. We are always calculating scenarios behind the scenes all the time, which is phenomenal, right? So you'll never have some spinning wheel trying to figure out, it's how it's thinking. We're doing the calculations anyways, real time behind the scenes. So they're ready to go. And we're always going to have, at least usually in most cases, 3 different strategies. One's going to be a debit spread. One's going to be a single leg. We know not everybody can do spreads. Keep in mind you have to have the certain count permissions as well to do multi-leg. So we'll have single legs there, like single long puts or long calls. And then we're going to have a credit spread as well. So we want you to explore with this tool to say, where do I fit? Where does the risk really lie? And what suits my requirements, right? And there's different payoffs for this. So this is, again, I like to use it a lot for education purposes. And every time before I place a trade in the instrument, I'm looking at this first. I'm looking at it to understand, is my scenario in line with probability? And it may deviate. Maybe you want to do a different kind of wide spread of maybe only 10 points or 5 points away. It's up to you to fine tune that at the order entry process, but we're just pulling the best of the best based on proper mechanics here. And again, this will only suggest defined risk strategies. What does that mean? So we'll never put you in a situation where you have to use a lot of margin, where you can have unlimited risk, really. So we want to protect people as much as possible. So if you're going to do a spread, you're always going to be capped out. So that's important as well. Again, this is a more conservative approach. on how to replicate being long or short stock using options. I'm gonna make sure I didn't miss anything in the Q&A because questions are coming in, right? So let's work on the phone app. This is all mobile, by the way, so this should work. It's dynamic. It will adjust the size on mobile. Please try it out. Let me know. This is brand new, okay? And I see some questions for some stocks. So throw them in the chat. I'll get to them in a minute once I show all the widgets here and how they work. So here's a quick strategy. And now it's up for you to pick which one you're interested in. If you hover over the I, you will get information as to what is a bear put spread. And we're using plain English here. We want to plain language so you understand it the best way possible. So we can see a bear put spread is a really here. A bullish strategy, which involves buying a put option and simultaneously selling another put option with the same expiry at the lower strike, right? So you can go through those and play around with them, right? I can look at a long put. What does that mean? A bear call spread and the credit spread. And the important thing is you can see the payoff on the chart, okay? That's the green and red zone, right? If I do a long put, I know that I'll make if the stock goes down right to zero, I'm making money, potentially 17,000 per contract. And the max risk I'll lose is 938. So what I like to do all the time is look at these and say, which has the least amount of risk that I want to consider, right? A lot more risk on the downside on this long put, $900. The bear call spread, right? We can also see is a risk as well, right? 950. But really, the put spread has the least amount of risk, 420, versus the gain of 680. And you'll see how the probability profit will change, right? We'll get a lot more in the credit spread, 57 versus 40. Now, what should you do here? Should you focus on credit spreads or debit spreads? The debit spreads or credit spreads? This is where the dashboard comes in. So if I click on the dashboard right now, I can get a whole new way of looking at volatility, right? So we can see implied volatility rank. Okay, so this is an important indicator in its own. I can give a whole webinar just on this topic alone, but really it's gauging, and we have a quick definition here. Hover over the I. We'll show you it's a metric used by option traders to assess the current 1 month implied volatility over a specific time frame. This is over 12 months we're using here. So, and we can see in a quick RPM type of gauge, is it high or low? Generally above 30, we have some premium baked in. We can sell some options. If it's right now, it's historically kind of low. And we can show the spread as well of the volatility level, implied versus historical. Is it tight? It looks like it right now, but we can see on this chart the history, which is quite unique and one of my favorite tools. I can see implied volatility has been recently above its historical norm. So options have been more volatile, more expensive. Until recently, it's crossed over and we're slightly below historical norms. So that to me instantly tells me maybe I can consider some debit spreads. They're not going to be overly expensive here. And volatility is decreasing actually, right? So you can look at that two ways. I can sell some premium. If that trend continues, they'll get cheaper and cheaper, which will benefit the premium seller of the options. Or if I'm buying a debit spread, maybe if volatility starts to expand back to normal trend, I will also gain on those options, right? So that's how we would use the historical volatility. So what else do we have here? We've put two new widgets never really seen before. And again, for simplification, what have we done? So we have an upside downside volatility bias. Again, this tool tells us really the estimated bias of a stock based on the options prices right now and how they're pricing in volatility. So we can see, and we used to call this basically skew. This is option skew in the technical term. Are puts more expensive than calls? That's a simple, looking at the option chain right now at that monthly expiry coming up, are puts more expensive than calls or vice versa? And that can give us a little bit of a gauge to say, are people pricing in more downside or more upside? In this case here, we see more downside, all right? So investors are looking maybe slightly bearish. Again, not an exact science here, but to give you a little bit extra information to help you be more confident with your strategy selection. We can see if you're going to be playing the downside, you're going to have to pay a little bit more for that. Maybe a lot of traders are thinking that the run up in NVIDIA is overdone. Also, it could be an advantage to premium sellers who are bullish. If you want to sell a put, there is some extra premium baked in on the put side. If you're bullish, you want to sell some premium, right? Again, a lot of mechanics around different types of strategies. We just want to give you the quick radar of what looks interesting from a volatility perspective. And it's pretty fun, engaging, and we can compare stocks, right? What's next? We have the timeline volatility bias. This is what we call like a volatility smile that will look like a smile on a chart, right? We can see are options more expensive in the short term, less than 3 months, or long term, right? So we can see in this case, we're looking at long term is 6 months, short term is 1 month, right? We can see right now long term options are more expensive. This is pretty normal. We call this a normal smile, a normal volatility smile, because there's more uncertainty down the line. But you'll see this change when we have a stock that has earnings coming up in the next few days. We'll see that short-term options become more expensive because of that possible price fluctuation on some earnings report. So keep that in mind before. This looks normal right now. So it really is telling us a story right now with NVIDIA. Volatility is pretty low. It's actually decreased from a week ago, right? It was 24 down to 20 for IVR. And we see a trend of volatility going down. So you can actually see it happening, right, in real time. And you can see the skew to the downside. Long-term options are more expensive. Kind of makes sense here because now we have key data. This is what we talked about: liquidity and earnings, right? So we have earnings next earnings date. If it's available, it will be here, which is extremely important to option traders. Always understand where the next earnings date is before you place a trade, because it does affect volatility, obviously. And this is pretty far out, which makes sense in how this chart's been going on the volatility history, which is pretty cool. Right? And we have the liquidity, 3 stars. It checks that box. If there was an ex-dividend date, we would report it here if the stock pays a dividend, because that also affects your options if you're a premium seller or as well. Again, all these deserve their own topics. Today's really to show you how the tool works, what our thought process was on this design of this tool. There's a lot of option tools out there. We have a unique take just to really help stock traders convert stock traders into option traders using proper mechanics. And there's no bias to credits or debit spreads. We want to give you the data to make your own decision and empower you to understand options first, so you have a nice, comfortable picture of where volatility has been, where it potentially could go, right? And you can also look at that volatility expected price movement this is the cone, by the way, the volatility cone in the first page that you can now express by monthly expiration. We're looking at January. It's the next monthly expiration. Again, we want time on our side. So as soon as we drop below 30 days of expiry left to go, we'll suggest the next month, because these are mainly directional biases, right? So keep that in mind. And now I can look at the expected move on the upside and downside. Extremely useful for stock traders, right? If I want to go to February now, February 20th, just before that earnings date, what's the expected move? There's a possible 15% move now in either direction, up or down, right? If you're bullish, we could hit 209. If you're bearish, you could hit 154. That's what we want to show here, just a quick gauge. I kind of equate it to being in the cockpit of an aircraft. I want to look at certain widgets right away and be constantly monitoring all times to get a quick glance, not an in-depth glance, but enough to know that I can make my next decision, right? That's kind of how we designed it in a way, right? So pretty fun. That's the dashboard. The final step below is something quite unique, because we know that a lot of option traders are indifferent to the stock symbol or the product at all. We understand that maybe you're hunting for specific volatility metrics. This is a unique way to be able to sort by IVR, implied volatility, historical volatility, and I use a lot the implied volatility versus historical volatility ratio. Each column is sortable. So what we're doing is we're comparing apples to apples here. Although you're considering NVIDIA, maybe there's a better way to execute your type of strategy. If you want to focus on debit spreads, is there another stock in that industry that I should be focused on that has better data? If I sort this, I can go to the highest. We can see Micron is right up there, 67 IVR, right? Lam Research is a popular name. If I can go the lowest as well. Maybe I want to invest in Qualcomm or First Solar. They have low IVRs. I can do the same thing for implied volatility. And you can kind of tell maybe earnings are coming up and they're extremely high, right? Micron's also still pretty high up there. It's had a really great run. We have an IV versus HV. So again, generally, above 1 is interesting to me, right? That means there's some premium baked in. If you're a premium seller, maybe consider these ones, right? Because the math is telling you that premium is maybe increasing or higher than usual. And the vice versa, it could be the low side. Maybe I want to look for here is again Qualcomm, pretty low. Qualcomm's interesting here. So this again is to generate ideas. although I was maybe focused on one stock, maybe there's a better way to execute my strategy. Let's look at Qualcomm. So I'm looking at Qualcomm right now because the data is quite unique. Very low IVR, very low ratio if I want to be directional. Again, I have no idea if the stock's bullish or bearish. But if I put QCOM right in, I'll do a search. All right, let that load up. I could go right in to Options Builder right now, and I'll jump right into the dashboard right now. So that's the number we saw in that peers comparison. There's some wild things happening right here, which is quite interesting. So what I'm seeing, low IVR, right? Pretty neutral on the bullish bearish bias, more volatility in the long term, right? But when you have this historical volatility, we're way below it for some reason. The green line's historical. The blue is right now the implied volatility. There's a wild spread. That's why we saw that inverse spread here happening, right? Lots of liquidity, right? What does that look like in terms of the strategy lab? I can go in the strategy lab now. It remembers the stock I'm looking at. We can see what a strange pricing spike. But we can see right now, if I have a technical opinion, we do. All right, we're bullish on this name. Looks like above 188. The up target's 188. Above 160 is a stop loss. Nice overlapping prior resistance support area. And now I instantly have ideas. So I could change my opinion if I say go up, select slightly upward, limiting my risk, boom, right away. I now have some unique strategies here. So I have a bull call spread because it looks relatively cheap in terms of volatility pricing. And keep in mind, what I like about this product the most is that these are realistic positions you can make. They don't cost too much, right? The exposure, I'm risking $385 per contract or $385 period for one contract to make 615, and we're above 40. We'll never. It's hard to get to 50 with these spreads, but above 40 is what I'm looking for, right? This is a pretty good risk reward payoff, pretty affordable, right? That's also important. We know that not everyone's account size is, a few hundred grand. So you got to be able to be actionable. And this is, right? So we can see that's interesting to me. We can see the risk payoff within the target price as well. And the whole strategy, $10 wide spread. These are the types of trades I'll take all day in terms of the spreads and the risk reward. And it falls within the expected move, which is upwards of 185, and within our target prices at Trading Central, right? Within two exact target prices, which is, again, all these boxes are clicking. This is a stock I'd put on my radar, right? If I'm bullish, I want to trade this name. Of course, more information is required, but this is meeting all the requirements of a pretty interesting setup. If I want to do just a long call, there's a way to do that. You're going to forego some of the profit, right? But you're going to risk $700 to make unlimited profit. But again, you're buying a 175. It's near at the money. That's the best way you're going to have the most success. It's not buying a $200 call because most of those will expire worthless. And keep in mind, most traders lose money in options because they're not following these mechanics, right? So again, designed to put you in the right area. And maybe you want to just take advantage of some premium. There is still some here, although not a lot, which makes sense. We saw the IVR quite low. Premium is a bit lower than usual, right? But you can still write a $5 wide bull put spread. This is, again, proper mechanics I'd take all day to make 168, right? You're risking a bit more, but your probability is way higher. So it's up to you to decide where do you fit in terms of your strategy. Running a lot of these contracts to create income if you're bullish, or do you want to go directional, right? Make a little bit more money, right? With a little bit less risk. Sometimes what I like to see here is that based on the volatility, the bull put spread, the credit spread, has actually less risk than the debit spread, right? And the long call, right? So again, a lot of traders, for some reason, think that credit spreads are too advanced or too risky. Not if you know what you're doing. It's very simple to execute these strategies with defined risk, right? As long as you know how to enter the position. That's a whole other conversation, by the way, of how to do the order entry. But understand that the bull put spread could have the least amount of risk, although you're giving up a lot more gain on the upside. But it's to gauge some interest, to gauge some information out there as to where should I be focused. That's how we designed it. I'll look at some other ways you can do this, right? So I was looking at a stock today, Starbucks, because from a technical perspective, Starbucks looked interesting. So what else can you do with this? Okay. I could jump right into this. And if I want a technical opinion, this is our other tool, which we'll maybe give a webinar in the future on automated technical analysis. Again, no opinions here. It's strictly by the book technical analysis in technical insight. Uh, Mine's a little slow. Here we go. It loads up. What you can also do is look for any classic patterns. I like classic patterns the best because they give us target prices. And this has been pretty choppy and it's been beaten down this stock, but I can see a bottom triangle here. This is a bottom triangle, which is a bottom reversal strategy that could be bullish. We have an upside target of 96. So I can jump right into options builder, right? It remembers the stock you're in. I'm bullish. I can look at, is there any trading central opinion? It's also bullish, right? So from a trend following perspective, the stock's bullish. From a pattern recognition, there's a pattern playing out right now. So we have two scenarios that look pretty good, right? And we have strategies and target prices that fall within expected move, right? And I instantly have results, by the way. I didn't have to change my strategy. It's bullish. If I like it, this is a pretty good payoff as well, right? Risking 231 to make 269 with a 48% probability of profit for a $5 wide. This is all beautiful mechanics of trading spreads, right? This is what we look for and how we designed it every day. So this is a very, very interesting risk reward. Pretty good if you're bullish. The stock has to move here. That's a different story, right? But all signs to us are pointing to maybe it's possibly a good opportunity. If you want to do a single long call, this is a cheaper stock, so it makes sense. You know, it's reasonable. We can get near 40 almost on a single leg, right? Risking 425 to have unlimited upside. You know, again, by January 16th, we got 44 days. Keep that in mind. And the credit spread is going to be tiny, right? Because maybe not a lot of volatility here. So when I see that really low, I want to see the dashboard. I click on dashboard. I can see low IVR. It's below 30. Probably not a great premium seller, right? But we can see the history. It's pretty flat, pretty stable. Again, I can cycle through and look at these different ideas of low versus high volatility. Any questions I missed here on that? Yes. So I know I'm going pretty fast because I want to kill it within an hour. There's so much to talk about. So sorry if I'm going too fast for everybody, but this should be available as a recording to review after. Keep that in mind. Okay. Yes, I know Firstrade too doesn't allow naked call selling. That's okay. We don't, again, we assume in this product that you have the stock. Keep that in mind. That's what the risk reward is going to show. If I want to do a covered call on this, I could quickly change it to creating income cash flow. Here's some covered call strategies. Again, I don't have the time to go through every strategy today. I want you to play with it and experiment. But again, this is assuming you have the stock at the current market price. That's how the risk reward works out right now. Okay. Again, just an estimate to give you a rough idea of what the net credit could be. That's what we're aiming for here and the probability of profit if you bought the stock today and sold a covered call. That's how that's working. Okay. Any other questions while I'm here? Yeah, cool tool. Thank you for that. And I found strategy outcomes suggest option expiry date is next 44 days. This is typical? Yeah. So again, a quick word on the expiry. We want longer expiries, the better. These are always monthly only, the standard monthly contract, third Friday of the month. And again, we have 44 days. Once we get below 30, we'll suggest the next series in the option chain, February in this case. Keep that in mind because it's mainly directional. We want time on our side. That's how we're working for it now. In the future iteration, we may change this. So we're constantly innovating. This is a brand new tool in the marketplace. We'd love to hear your feedback as well. You can reach me out at tradingcentral.com. If you have questions, feedback, please find me. My email's online. It's available. And I'd love to hear your thoughts. But for now, this is, again, we want to protect people as much as possible and give realistic buying power for options, right? This is really the passion we have with this tool. Can you show a penny stock? Yeah. I wonder if I can show a stock that has no liquidity or something. I don't know any penny stocks offhand. If you have a symbol, throw it in. But we can look at stocks that don't have a lot of liquidity. I wonder, one time I looked at Peloton and it wasn't working for a while, but then it got active again. Let's just have a look at an extreme case here, I would say. It's a $6 stock. I would almost myself consider that a penny stock, but anything below $10 for me is considered a penny stock, but that's to each their own. If I look at that right now in Options Builder, let's see what we get. And again, I'm on a test account, so it's a bit slow sometimes, but I'm gonna load that up. And so here we go. So if we can't find a proper spread at all, we won't even suggest anything for you. We don't want to just suggest strategies just because. That's not what we care about here at all, and not proper mechanics. So we look at the liquidity, and if it's nothing available, we just stay away from it. It doesn't mean you can't trade options on this product. You probably can. There's an option chain, We just don't feel it's prudent to do so. You can look at the dashboard, and if you have data, at some point, if you had options available, it will appear here and it will look kind of funny. So keep that in mind. If there's nothing available, we won't show any data for that reason, right? But we'll show you some peers, though. Maybe there's a better way to execute your strategy in that sector by looking at different volatility metrics. PLNT is an interesting one. I just signed up for them locally here. So I'm just curious. Let's just try that symbol out. Do we have options on it? Again, I have no idea right away. I'll just go into the options builder. And again, you won't always find strategies, and that is okay. It's by design. Here, they look pretty affordable. This is interesting, right? So we have some strategies. I don't think I have a technical opinion. I don't think we widely cover it. We might. Sometimes, by the way, this takes the time to load the trading plan. So let's give it a second, and it could load if you have it. But we cover about 9,000 instruments in that area. But on the dashboard, we have a lot of volatility kind of in here, but again, not the best liquidity. 2 out of 3 stars, I'd be hesitant. But you can still do strategies, right? There's a bullish strategy, pretty not bad risk reward, right? Risking 172 to make 328, right? $5 bull call spread. That makes a lot of sense, right? And it's fall again. Every strategy you're going to see will always fall within the expected move of the first expiry, right? The target price has to be obtainable. I can't stress this enough, right? Even though this is a very low liquidity, but maybe I wouldn't trade this in options. You can. The strategy has to fall within the expected move, and they always will. For one last quick look, because I know we're running out of time. Apple. I will just look at Apple because I always kind of use this on my demos. Again, if you're trying to find the tool, you have to get a quote, right? Get a quote anywhere, and then go into Options Builder. I know that was one of the questions that came up. All right, so let's just click this one to load. Give it a second here because I'm overloading here. It's pretty active. Here we go. So there's Apple, right? Again, this is a nice $15 wide bull call spread, risking 622 to make 878. Proper mechanics, but again, zooming in, it falls within the expected move. Those target prices. That's the 295 that we're going to sell. Well, bulls are expecting 297 right now. It's all by design to point you in the right area. You don't have to agree with it. Maybe it's not the best risk reward you care about. Maybe you want a tighter spread or a wider spread. Maybe you don't want to, if you want to spend half of that max risk, you can do so. You can adjust it again at the order entry level, but we want to make sure you put it towards the right area. We're using delta to really help us find the ideal scenarios based on probability. All right. And again, we're pretty proud of this fact. It falls within the expected move. We have a preference. We're bullish as well. And look at the target prices on a liquid stock like Apple. We have 2 targets we're expecting by the expiry if you're just bullish the stock itself, right? And the stock's had a pretty good run. It's been pulling back in the last few days. But again, this is a trend following perspective where this tool really shines, right? All falling within the expected move. And look at the strategy. This is how we like to use technical views. They fall within these strike prices, right? These target prices are great strike prices to have as targets as well, right? So it's all mechanical and by design. I encourage you to play along with it a lot more. I only have a few minutes. I want to open up to the floor for any questions, and I'll let the questions come in. Please do. Um, I want to show you one more tool though. If you go to Discover, Research and Tools, Discover, you're going to find a lot more tools by Trading Central. So you have market news. This is our market buzz. If you want to learn about, we use our LLM, our large language model, to cipher all articles around the world to give a positive or bearish bias on the news itself based on the tone. And you can get a lot of information here. It deserves its own time. But if you want to dig into the news of what's market moving, that's the news. We talked about technical insight. You can build your own strategy in Strategy Builder as well. But I want to go to the bottom. So if you here, I'll go back to markets and news. And if you scroll down, you're going to have 3 newsletters by Trading Central. I think these are critical that everyone should sign up for just because it gives you so much free information. So the one our team writes manually from our desk is the morning brief. If you load it, if you see example right now, we're going to give you all our directional views of the futures in the morning to help you plan your day, commodities, right? All the news that's relevant to you. These are market moving news, by the way. We write this by hand daily. What to expect, what's happened in Asian markets and European markets, what's happening in Canada, US, the US snapshot of what stocks are making moves here, right? What earnings to expect coming out. We got Dollar General on deck, right? Some interesting ones. HPE. There's an economic calendar, what's high and low in terms of importance. Again, to arm you with your day, there's no excuses in the morning to understand what's happening in the day. You can get this while you have your coffee and be aware of new IPOs and the market outlook. So what I was just showing inside the options product, the technical views is the same methodology here. So right now, at Thursday this morning, you can see a trading plan for 30-minute intraday, right? This changes every hour, but you can see at least how markets are set up based on a trend following perspective. If there's any technical events that are interesting, they'll be available here as well. This is the automated pattern recognition, right? All available to you. So again, explore with that. You can put your email in and you'll get it in your inbox, or just come right to the Discover page under the news, scroll to the bottom and get the analysis. You want to look at crude oil, that's there too. Again, you don't have to be able to trade these products to understand their value, to know the directional bias is going to put you in a better position because they affect the stocks as well, the energy sector as well. So pretty cool. There's a lot more to that as well, but there's a lot of ETFs if you're looking at. I won't go through all of them today, but if you're looking at technical snapshots, that's the same report, but more instruments available. If you're looking at ETFs, again, we have strictly ETFs, which ones have interesting technical scores from a technical perspective. So there's a lot of information here. I know it's a lot today, but that's the first look at, again, looking for options. I think I was looking at stocks like I can put in, again, to find it, put a quote anywhere, put the symbol in. There you go. You've got options builder right there to play with. So I encourage you all to play and have fun with it. And I'll have a couple minutes. I'll go through some questions I may have missed. I have one question saying, why limit info to monthlies rather than also including weeklies? Mainly because of our target audience of traders trying to replicate long or short stock, usually for over 20 days out. The best way possible using options. That's our first stage. Our first stage was how can we replicate being long or short stock with the same probability of profit or as close to as buying the shares or shorting the shares outright. We need time on that side. We work with the standard monthlies. A little bit less risk than the added volatility of shorter term options. Not to say we can't do shorter term. The same logic applies, the same methodologies apply. We'll just integrate that at a later stage if there's demand. But there wasn't any demand for it right now. It's more of how do I trade options in using proper mechanics that match our own trading style as well. Directional biases at Trading Central using technical views. That requires like a 20-day time frame, which works great on monthly expiration cycles. But there's no right or wrong. You can still trade intraday, trade weeklies if you want. It's just our analysis is more built for a longer term monthly expiration. That's all. Any other questions here? So again, I see someone talking about iron flies and condors. I'm not going to comment on that just because it's not designed for this product. Again, this is designed to be define risk, dual leg as a max for now. In the future, we'll add more legs. So we'll keep adding more features to this. Again, this is a brand new tool. We're starting with the most basic strategies first, and then at some point, if there's demand, I'll love to add like neutral strategies. Again, so neutral strategies, it deserves its own conversation, but at some point we're going to have go up, go down, or neutral and open up a whole new door. But it requires certain trading, limitations and having certain access as well. So we're keeping it pretty simple for now. But great questions. This is so someone's asking when is it available, but this should be available to everyone right now, right? This is live right now. Yeah, morning briefs. I think I showed that. So morning briefs are available. It's a good question there. That's again under go to research and tools, right? Discover, and then under the news, the default page, you're in news right away. Just scroll to the bottom. There you are, and you can subscribe right there with your email address to each individual one. And then questions here. There's lots coming in. Thank you for that. So I could see, someone's asking, do you recommend the debit calendar spread? Probably a profit. How would the win rate be Tesla versus Apple? The debit, I do recommend those, like if you want to have directional bias, right? So there's no preference here. All I care about is how good is the probability of profit. If it's below 40, I'm really not interested in it, right? If you're doing debit spreads. Again, there's a lot of discussion on where should you be focused in trading options. Do you want to focus on credit spreads or debit spreads? Which has a better chance of success? it's to each their own, right? Everyone has their own strategy. There's no right or wrong way to do it. All right. It's whatever suits your investment style, your time horizon, your preference, and your really your interest. Because trading should be fun, right? And you should be able to have as much fun as possible. Um, and there's different ways to do that using proper mechanics, right? So I'll put on like I was looking at LVS for example, right? I was just to pull up today because we had an interesting technical opinion. Um, will it work? It's a bit slow. Here we go. LVS. Someone was asking about this question today. It's being a bit slow to me today. But again, no real preference on strategy. It's just as long as you have the proper mechanics and you're aware of the volatility, where it lies, is it high or low? Is there enough liquidity? Right. So this one was interesting because I had technical insight have yeah, continuation bearish triangle on LVS, right? So sometimes I'll use two products side by side. I'll get the technical opinion, right? Then I'll jump into Options Builder and see if there's any bearish opinion coming from Trading Central on the trend following side. And here, this is interesting. We are a bit more bullish on the long-term side. Quite interesting. But again, this is a great example because I'm looking for that closest to 50% probability of profit. If I want to be long LVS and not want to have to buy 100 shares, you can do so. I want to use options to save some buying power. This is a great example of that, right? A $5 wide bull call spread. I'm risking only $220 to make 280. That's what we look for in these types of spreads. It's up to you to decide how many contracts you want to trade. But that's a lot there today. I'll just quickly look at if there's any more questions. We're past the hour. Um, yeah. So again, someone's asking, like, where can I check the at the money IV? All I can show you right now is real time IV in the dashboard. You'll see it, right? So by different strikes, again, maybe that's in the platform in the options platform itself, but we're simplifying it just to know, put you in the ballpark of where IV stands and the trend as well. Is it going up or down in the last 7 days? That's also interesting. Again, you can build strategies around this peers comparison table alone. I can talk about this one for hours, but I've talked a lot today. There's a lot of information. I hope you all found it valuable. I hope you get to play around with it because it's really fun to compare different types of stocks, to make watch lists. We're going to have different integrations and different features coming in, so stay tuned. And I'll be back. We'll talk a bit more some of these other products about fundamental analysis, technical analysis, news, and how you could tie it all in to an overall trading strategy. But that is literally all the time, unfortunately, that we have for today. I thank you all for tuning in, especially around lunchtime. Always impressed of seeing people want to learn and broaden their trading horizon and add some more tools to their toolbox. Again, if you have questions at all, I'm Gary Christie, Trading Central. Reach out, tradingcentral.com. And I thank you all for your time today. And happy trading. It's going to be interesting, maybe Santa Claus rally going to the end of the year. So I thank you all. And yeah, please try it out. Please try the tool and give us some feedback. We love it. All right. That's all the questions I see as well. So I think we answered everything. So thank you all again. Take care. Happy trading.